Joining us in a first on CNBC interview is Varun Krishna. He's the CEO of Rocket Companies. Varun, great to have you here. Shares are doing well lately, near about a 3-year high, I think. Why could a rate cut make mortgage rates rise?
Thank you, Kelly. It's great to be here. I think the good news is today we've got a great rate environment for clients who are really looking to jump into the business. And so a lot of that rate cut is already baked into the market. And so that's the reason that you see the interest rate environment where it is. And, the good news for us is we're really focused on meeting our clients where they are. And really, we've seen an increase in demand for both refi and purchase. And the good news is, for those folks that have been waiting on the sidelines, kind of looking to sort of jump into that home purchase, this really helps them to kind of lock in a rate today.
I look at 6.1, and we all know when that rate goes below 6, the headlines are going to be everywhere. The buyers are going to be a little bit more excited. Maybe not a huge amount, but a little bit. If they go 50 tomorrow, that could certainly. And I know what you're talking. We always talk about the price off the 10-year. So it's not the overnight Fed funds rate that really matters. And maybe you know the formula exactly better than I. It's kind of the 10-year yield plus or minus a spread, which is historically wide right now.
Yeah, I think, look, a 50-point would be a really nice thing for the rally of the market. I think we'll start to see demand obviously increase as well. But that's going to be kind of the big question as the Fed weighs in terms of, unemployment versus inflation. The thing I would share is, over the past 2 years, we have over 6 million loans that are out there that are over 6.5% on the interest rate. And so the good news is, a lot of those clients are sort of have the potential to be in the money, and we're happy to serve them. This is a big focus for us. We're growing our share in any rate environment, whether, it's the previous conditions or what we're seeing now. And so we're focused on increasing the scalability of our platform, meeting our clients where they are, and delivering an incredible AI-powered experience that really reflects who Rocket is.
If spreads were at historical levels, the mortgage rate would already be in the 5s, wouldn't it?
Well, I think that's one of the things. You've got a lot of folks out there that have, interest rates that are between 5 and 7%. And so the good news is, as the markets rally, we just have an opportunity for many of those folks to come to Rocket, look at a rate and term refinance and really be able to have an amazing experience.
A lot of traders have been looking for kind of stocks to play on a rate cut, and Rocket is a name that often gets mentioned. My question would be, how much delta is there? Sure, it's a catalyst. Sure, we've got buyers and refi demand kind of coming in at the margin. But it's incremental, isn't it? It's not transformative.
Well, our focus really, we had our Investor Day event just last week, and the two big things that we focused on with investors are our long-term growth targets. We want to double our purchase market share from 4 to 8%. We want to significantly increase our refi market share from 12 to 20%. And the reason that we feel confident in that, which would lead to about $275 billion in production in the year 2027, is the power of our technology investment. We have something that we call the Rocket Super Stack. It's composed of 4 layers. It's the origination servicing flywheel that allows us to serve clients for life. It's the multi-channel experiences that we deliver that allow us to be wholesale, direct to consumer, and work with enterprise partners. It's the proprietary AI-driven investments that we've made on top of that, and it's a brand that clients trust. And so that's one of the reasons that we have confidence in our ability to grow kind of in any market.
Although, I think about your ads from a few years back, which, I always enjoyed, but I think how high are your customer acquisition costs in order to grow that market share? Is that through marketing, or what other sort of opportunities do you have, and how costly are those?
Yeah, I think there's basically 2 approaches that we have. We are obviously very focused in our marketing approach as well. And so we have a full funnel strategy. We have a deep client segmentation. We have a core creative idea that we're working on. And then ultimately, we have a flywheel that's created when your brand and performance marketing dollars start to work together. And that's been a big focus of our new CMO, Jonathan Mildenhall. The second thing is that what we call our origination servicing flywheel, where we actually help our existing clients who are part of our servicing base with new mortgage products and offerings. And that allows us to originate a new purchase loan, a rate and term refinance, a home equity loan, with the ability to reserve those clients at a lower client acquisition cost. And so the combination of brand and performance dollars working together more efficiently, but also really leveraging our servicing book to create a long-term relationships with clients, that's kind of our growth strategy.